itself. Change is the way of success. Government support, I think, will also be there. They will undoubtedly support the export policies. I hope they should do that. So in case that happens, there is going to be a lot of exports going forward in India. So understanding that fact, so now let me just tell you a few important things about India. Friends, 55% of the market share in global services services outsourcing is with India. It's 55%. India is the second largest casting producer in the world. We are the second largest in steel and cement segment. We are the second largest. Understand one important, very important. You always feel like entire mobile market is captured by China. No, we are the second largest mobile manufacturer in the world. Second largest. We are the third largest producer of coal and fourth largest in iron. Can you imagine, I mean, where we are? In 2017, it became the fourth largest auto market. We were the fourth largest auto market in 2017. We are the world's third largest truck and heavy vehicle manufacturer. And we are the fourth largest in the car segment. I think, friends, this clarifies that what capacity and capability India has. So now going back to the more basic. This is what about the India and China and what kind of positives what we can see going forward. So understanding these positives too, now you will get confused. You will say, "Arey, sometime back you were talking about a lot of negatives, lot of issues, be careful, etc. And now you're talking about there are opportunities." So as I said, when there is a problem, there is always an opportunity. There's nothing like in our own life. Always understand, if something is in trouble, there is something is rising, something is shining. So my take is my suggestion is invest in a staggered manner in the instruments like SIP. Go in for equity instrument. If you really want to go in for the equity instrument, please do not invest a larger sum. Go in for the SIP, because the current buying level is on a very low end. Your NAVs are on the lower end, your equity prices are on the lower end, but you don't know, even I also don't know, is this the lower end? This can be much lower than the current level also. So, but then if you start doing it in a staggered manner, maybe if you want to buy equity, say for example you want to buy Tata Motors, for example, buy maybe start buying few stocks this month, few stocks maybe next month, or maybe do kind of a weekly kind of a buying. Don't do any kind of a bulk buying. So that will build your equity portfolio. So once the market moves up and then we get the positive results from the market, the India starts shining. Of course, with all of our support, because if we support our own companies, then only it is going to shine. Otherwise, it will not. So start consuming only Indian-based products, Indian manufactured products. That will, as I said, boost up the entire economy. So because our internal own consumption is too much. Look at the population. Look at the mobile costing in India. It is so cheap, because even a 1 rupee revenue from one person, it builds so much of the revenue for the company. So that is how the power of population we have. Let's utilize this. Let's use our own Indian company manufactured products. Invest in a staggered manner. So as I said, invest in the staggered manner in the equities, in the mutual funds. Go in for the products which are high yield kind of fixed instrument. Say for example bonds, which are high yield bonds. Go in for the products which gets you assured returns, the principal safety, at the same time tax efficiency and the higher returns. There are a number of products, so maybe you can consult with your consultant, or you can just search it, etc. There are a number of different products which gets you the principal guarantee, and at the same time they gets you much better returns, and even it is more tax efficient also. Invest in the good corporate FDs, really good corporate FDs. Now if you see, there are a lot of companies wherein their rating is got downgraded in the international market. look at their financials. Their business in India is extremely sound, but only if they are exposed for the outside country FII's investment. So their rating is got downgraded. So I think need not have to worry. See to it that those kind of companies are really sound. Look at their business model. Invest in those instruments and keep your money well preserved. Interest rates are falling drastically. Look at the interest rate. Constantly there is a reduction in the interest rate happening in India. Going forward, still it will reduce a lot, because there has to be a good amount of liquidity available for the corporates, the businesses in India. So there will be further rate reduction in the interest rate. So when the interest rate goes down for the loan, of course it goes down for the fixed deposit or the investments also. So invest in the plans which are long term, completely safe and secured, at the same time gets you the assured returns. There are also plans wherein they are long term, completely safe, they get you tax free kind of or tax efficient kind of returns, and they get you completely assured returns. So going for those instruments. So all this, you need to plan it properly. Understand again and again. I'm telling you, please understand that don't get excited. At the same time, don't get extremely nervous also. Utilize this time properly. How many of you really feel that I am in the sound position at this point of time? If you really feel that I am in the sound position at this point of time, let this lockdown get extended for another 1 month also. Still I am fine. Let another 2 months also. Still I am fine. It's absolutely okay. If you are in that particular position, then I think you can certainly take that kind of a call. But if you are not, please be careful. Please understand situation is not really that great, because you also know, if at all you don't go to office for 15 days, what kind of a workload or what kind of issues you face for next 1.5 months.